trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. I'm posting a chart here of crude oil, folks. We've got the setup that we've been waiting for. If it's going to hold this level, frankly, I'm not sure that it's going to, but there's a possibility. But that's not what I wanted to show you. I wanted to show you gold. This is gold on the intraday chart, but let's go back to where we were talking about it just the other day when we were making new highs up in this area. And we said the fact that it made a new high by only a little bit like this and turned lower at a high probability we're getting ready for some type of a correction. What we did is we went down to the 4-hour chart. And as you can see, as it made a new high up in here by just a little bit, and it did it in beautiful fashion. There's your ABCD pattern right there. Of course, there's a much larger one right there that we didn't talk about, and that took us exactly up to the almost to the exact 1.618 expansion. Was at 249. It made a high at 255. It's right at 224.55, and we have dropped $100 an ounce in a matter of 2 trading days. This is not a good sign, boys and girls, and it's still dropping, as you can see. Now, this is telling us that maybe all of these things that we're looking at, copper, platinum, silver, gold, all these things are really in a big, just a minute, I need to turn this off here in crude oil because it's making a bottom now. Since we're doing this, I'm getting ready to possibly buy this. So what I want to do is I'm going to go down to the hourly chart and see if I can find any semblance of support, and I certainly can. Here's where we are right now. We've taken out this, and we're setting right at this low right now. So it's got to turn right here. There's no ifs, ands, or buts about it. 76.70 has been the low. I just bought it at 76.76. I've got to stop at 76.56. I'm only risking $200 in this. I feel so strongly that this number is going to hold. We took out the low of yesterday, which is okay, just like it took out the low of the day before. And now we're going to see if it can hold this level. And all I'm doing, folks, it's risk control, nothing more, nothing less. I'm willing to risk $200 to see if that's going to be the case. Now, let's take another one that we'll be watching for tomorrow because we'll be doing live trading tomorrow. This is a perfect setup. We've been talking about it for quite some time. We're going to do the hourly because that shows it much clearer. And there it was today. You'll see here's where we were. And we said the market should get right up here to 78.5, and the high was 489. 488.5 was the sell. You can see it right there. There's your ABCD, and our stop is right above here. Now, what we're doing with that is we're using a small amount of risk to see if we're going to be correct. And believe me, folks, you're going to get stopped out a lot, but there's going to be times where you make a lot too. And that's what you're trying to do, is to get the odds in your favor to see if it's going to work. That's the real bottom line of what we're watching here. Okay, so pay very, very close attention to that, I think, because risk control is what controls the whole game. Now, we've already talked about NVIDIA and the price objective. We've already talked about the Dow Jones transportations. We've already talked about the cash S&P and the December corn. Those were the key things that I wanted to focus on today. We have one other trade that is a perfect setup that I'll share with you in a moment, but our guest today hopefully will be Jeff Huge of Alpha Insights. But because of the market volatility, Jeff might not be able to join us today. If not, we'll have him next week. I will not be doing the show tomorrow because I do live trading between 9 and 12 p.m., and my voice can only do about 3 straight hours. And after a little break, I might be able to come on, but odds are no, especially being a Friday. And I've had a very, very active week here, so we have to pay close attention to what's going on. I've had several people ask me about the Dow Jones position that we have on, and where are we planning to take profits? Well, it's up over $4,000 right now, folks, and that's happened in a matter of 2 days. So you got to be patient. If the market closes badly today, that is because that NVIDIA may have made a high up here at this 1,050 or what it is, and now that they're splitting 10 for 1, and it's redoing the Industrial Revolution. That's certainly a possibility. Then you will have to take a profit in the thing and just wait and see. But right now, if NVIDIA starts to roll over and closes, say it closes below 1,020 or something, maybe it backs off $30, $40. That tells you that target you were looking at may be good. And if you have that big of a lead in it, my goodness, that's a good idea to try to stay with it. Let's just get this out of the way here and see if we can find it again. I had it here somewhere. I got so many charts in here, I don't know which ones are which. Hold on. Oh, the only way I can do it, folks, is to put them in cascade format so that I can pull it up as I see it, and there it is. Okay, now let's be the devil's advocate here. Okay, now there was the 382 was the first 382 that we wanted to sell it at. That was right there. We sold that right there at 40.40. Okay, almost matched it yesterday. Last night's high, exact 382 off of the high we made way back here on the 19th. Okay, that's the 20th is Monday. Here we are into Thursday. That tells us that the ABCD on this move, if that's it, then there's A. Okay, here's B, there's C, and so right now here at 393.50, down about another 50 points. And there's a 1.618 expansion. There's your game right there. So you want to be taking your profits there, unless you want to say, oh, maybe this is going to be the big casino. Well, it might be the big casino, but you got to make a decision. And if ABC brings you to the dance, as Yogi Berra said, you got to go to dance with the girl that took you to the dance. And so I'd be willing to take my profits down here at 393.40. That's only 60 points away. However, folks, let's be the devil's advocate here. If this is the big high, and we have dropped 800 points here in the Dow here in 3 days, okay, there's a chance that this might be it. So what you have to do is look how close we came to that number. So we have to watch it. What I would do is if we close below here, you probably should add another one. I'm not going to tell you to do that because that's being greedy. And if you become greedy, you'll soon be the needy, as told by Tom Sawyer, also known as Samuel Clemens. All right, now let's move on here and move on to a question that someone's had about another stock. Of course, it has to be Tesla. That's the only other stock that's traded on the New York Stock Exchange, I think. So let's get this up here and take a quick look today. And then I have to show you the trade that we just did today, and we're going to see if it's working. I haven't looked at it since we did it. And here's Tesla. Tesla still looks like it's going to go lower, folks. We had that big pop yesterday, and all it did was go right up to the exact 61% retracement. And that was 2 days ago. And look, it hasn't really done very much. That tells us that we're going to have at least, well, this is my opinion, at least an A, B, C, D down to this level right about here. So I wouldn't touch Tesla till it gets, look at the gaps that are in here. We've already filled one. We still got another one to fill. So we'll see what happens here. I think the clock on the wall, and I didn't put it up on the wall, let's get it up here, is ready for a commercial. We'll be right back.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, education educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, this is the British pound. This is the Forex chart. It's not the futures. The futures at the CME work off of a contract, a legitimate contract. Forex, you're trading against the Forex bank. Now, the Forex bank, when they take the order, they usually, 99% of the time, and I'm not joking about the percentage, they'll book the order themselves. The reason why? They know that most traders that don't know what the hell they're doing, raise your hand, Larry. I used to be in that category. Now, sometimes I should raise both hands and say, yes, I surrender. But those that have been around for a while, 3 to 5 years, learn how to put in stops and make a little money here and there, okay? But new traders, year or two into the business, usually lose. So those banks will take those trades and take the other side of the action. In other words, if you want to buy, they'll sell it to you. At the Merc, there's somebody on the other side of the trade that you don't know. So that's the big difference. Now look at the British pound. You can see we had the ABCD to the down move here. We extended down a little bit, not unusual. They're not perfect, of course. Now we had the ABCD on the upside. As you look at this, there's your AB leg right here, okay? That means your CD leg is right behind it, right there, okay? So when you mark that like that, we're just going to get this out of the way here. Take a quick look at it. You want to know what ratio that is off of this high. So if you mark this down, put that in, and you'll see it comes in right at the exact 786 retracement. I didn't see that till really late last night. Fortunately, the market gave us a little bit of a rally to get short up in here, and now it's working in our favor. So we have to ask ourselves, what kind of profit objective would we look at if we did a trade like this on the daily? You do 2 things. You count the number of days from the low to the high, and you'll see that it was 9 days up. So if that's correct, this one should be 9 days up. If you move that over like this, yesterday was the 9th day, okay? So that's the real reason why you're paying close attention to these things, okay? So now that tells us the buy. It's going to have to turn off the stop and P, folks. It's making new lows as we speak. Oh, we've got all these charts trying to show you what we're doing here. And, well, I don't know where it is. Just a minute. Window, title, vertical, cascade. Okay, where is it? It is, here it is, right here. Okay, see it's starting to move down. Let me get this out of the way. Okay, now that's done. So let's get over and look at the British pound again. Get this British pound. So if that's the case, our first profit objective would be just like it did here. 1, 2, 3, 4, 5 days down. There's day 1, day 2, 3, 4, 5 days down would be right about here. And you want to find out what ratio should it be at that point. So you mark that in. Your 382 ratio would be coming in at 126.40. That would be an $800 gain with a $150 loss. So that's the kind you like to see. Okay, very, very important. And we just made that number we were doing at boys and girls. I got to do some things here because I have positions on, and I want to make sure I do it right. We just made that number we were waiting to see in the Dow Jones. There it is, right there. That's the number. It's just hitting just as we're doing it right now. So let's pay attention here because if that should hold, then that's going to be something that's going to be really interesting right here. That's the main thing that we want to be watching. I'll give it a minute or two, and then we'll see what's going to happen, and then we'll not worry too much about it right here. So our low was 42.29. We're in that ballpark, so we're going to leave it work here for a little bit because we are at the proverbial precipice of doing something significant, boys and girls. That's basically it. It's better to be in a market wishing you were out than out of a market wishing you were in. I think that's how it works, isn't it? No, it's better to be out of a market wishing you were in than in a market wishing you were out. And that's what you don't want to do. You don't want to do that. You don't want to be in a market wishing you were out. You can get out. All you got to do is hit the exit sign, stop or sell, and you get out of your buy stop or sell stop, and you got pretty much that thing cared. You got it already cared for, okay? So that's what we're watching here this morning. And as we look at some of these things, unfolding and see what's going to happen here. I want to give it just this is such a critical level, folks, that I have to look at this. That's how adamant I am about it. This should be the place where you want to be taking profits. We've got 2.5 hours left to go in the trading day, and we're going to find out whether NVIDIA is going to do this or not. Oh, did I? No, it's still getting data. So we've got to get it down to the 1.618. We're very, very close. We're only 10 pips away. So we want to be watching this together. It's like Memorex. You just want to be able to stand and watch it repeat. Oh, is it live or is it Memorex? You probably don't. Most of you people don't even remember that commercial. But that was a big one back in the day. Boy, I'm really tempted to cover this stop and baloney that I've been put on here. So okay, let's move on here, see where we are here. Get the stop and P up here. See, our old low back here was at, our old low here is 1675, and we have taken that out by just a little bit. And the artificial intelligence tells us, let's just look at it for kicks and giggles, tells us that we should come down even more down in here till about 1030. So we're at a really super critical level right here. And we're going to find out. I sold it at the 382, folks. That's where I sold it, and I'm just waiting to see. And boy, I'll tell you, that's a pretty big bet right here. But this thing has got my focus is this right here, the fact that we're setting right there. The low has been 39335. Boy, that's close enough for government work, folks. So I'm going to assume that's going to hold. So bear with me 1 second here. I got to come up here and take where is it at right here? Just want to get out at the market. Bada bing, bada boom. Boom. Okay. I took my profit, and that's it. And just to see how we're doing for the day, let's come up here, get this out of the way. See, the net on the day has been 5035. So it's doing okay. And we'll find out what happens with the rest of it from there. But that is the number. As a matter of fact, I should buy the darn thing. Actually, I really should. I'm not going to because I got to finish this show. And I might do it while I'm on the show. This is a really low-risk trade. I mean, boy, you don't have to risk very much here at all. 39364. I mean, that's a really low-risk trade. If I were doing the show today, tomorrow's show, I would buy that. I'll trade 1.618 all day long, and I'll win easy 8 out of 10. This is a very low risk trade. The low has been 35. It's trading at 60. I would have probably been looking to buy it right about now, and I wouldn't risk more than 55, 20. Risk about 30 pips, $150. And if you're short all the way down, that's not a risk at all. That's just cannon fodder. That's nothing. That's just paying the toll man as he goes past the bridge. No big deal. Hey, we got to take a break here, I believe, and hopefully we're going to have Jeff Hughes coming up. That's 51 seconds away. So let's take a look at Apple. Everybody's asking, how's Apple doing? Remember, Apple was setting up there at the exact 61% retracement here. By the way, folks, if we start making another lows in that the S&P, I will be back short again. Let's move this up here. There's where we are right here. Yeah, it's coming off. There was the 70. Look at this low volume. This is really low volume. Boy, that's not a good sign. Where are the buyers? Hello, operator. 877-927-6648. Stay tuned for Jeff Hughes.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks, and we're talking with Jeff Huge of Alpha Insights. And behold, the markets are led by gold. Tell us about this chart, Jeff.
How you doing, Larry? Yeah, it's interesting. Everybody's all excited about the new bull market in AI stocks led by NVIDIA with their blowout quarter last night. And if we look at year-to-date performance through last night's close, it looks like gold is what's leading the pack. And we've looked at a variety of asset classes from, stocks, to international stocks, T-bills to bonds. And gold is outperforming everything by a very wide margin, over 400 basis points outperformance to the large cap S&P 500 index. So I think it's very peculiar. And for those who are, focused solely on, tech stocks, I think you're really missing the boat here. And I think that the breakout in gold is just beginning.
Mm-hmm. Well, this next chart has dear to my heart. You and I and maybe three other people even remember who Charles Dower and Richard Russell were. I happen to know Richard Russell personally because he lived in California. But this is the Dow theory. And tell the folks what the Dow theory is all about.
Well, Charles Dow, who back in the 1800s, around 1896, started the Dow Jones Company, which, actually owns the Wall Street Journal and, the Dow Jones Industrial Average and Transportation Average. And, he came to the conclusion that, these various averages of stocks, industrials, and transportations need to confirm one another. In other words, the companies that make the goods have to be going in the same direction as the companies that transport the goods. Otherwise, a non-confirmation or negative divergence between those two indexes would constitute some sort of a false breakout in his view. And that's proven to be the case more often than not. And as Larry, you and I were talking about the other day, the transportations have been just miserable. In fact, as the Dow broke out to a new all-time high in January, transportations never even came close. In fact, they continued down. And as we made a new high back in March in the Dow, transportations made a lower high. And then we made the most recent high in the Dow on Monday of this week, and transportations again made a lower high. And so what we have is three consistent lower highs consecutively as the Dow Industrials made higher highs, the transportations made these lower highs. And that triple non-confirmation is significant. I was talking with a number of friends recently just to kind of get other people's input. And I think that the longer these non-confirmations remain in place and the more frequent at degrees or timescales, it really adds to the significance of the non-confirmation and the likely trend reversal that is imminent, in my opinion.
Well, it's certainly interesting, and it's certainly acting crazy, that's for sure. I've never seen anything like it, and I've been looking at these things for a long time. Oh, here's got bullish incentive here is going on, so tell us what you're looking at here, my friend.
Yeah, we look at a lot of different sentiment indicators for various cohorts of investors, be it institutional investors, individual investors, but advisors are the cohort that has the most influence on all other investors because they're the ones that are writing opinions. They're the people like myself that actually, publish research and steer whether it be institutional and professional investors or individual investors into the various, decisions that they made. And what we see right now is advisor sentiment is pushing back up toward its recent extreme, which was achieved in March. And what we're looking at in this chart, the dark black line, is the spread between bulls and bears, so bulls minus bears. And that got up to about 48% in March. It tanked and got all the way down to around 26% at the end of April and has now rallied, in fact, surged back to around 42%. And these are among the highest readings on record going back 30 years. And so anything above 40 is extreme bullish sentiment. And that's what we see right now at present day as the market is really just off its all-time high on the S&P. Meanwhile, the Dow Jones is down over 400 points as we speak.
Yeah, I know. It's had a big thing. Oh, here's one that's very interesting. You showed this to me last week, and I'm glad you brought it up. This is a Really great chart, folks. It's a very crowded trade. So this goes back only 70 years. So tell us what this is telling us, Jeff.
Yeah, Ken French is an academic out of Chicago who's done a lot of market research, and he does a number of studies and has a free a website you can go get all this data from. And what we're looking at right now is a 20-year annual return differential between low dividend stocks and high dividend stocks. And right now, it looks like low dividend stocks are outperforming high dividend stocks by the widest margin on record. Typically, when that spread gets above 1%, as it did back in 1968, 1969, 1972, and March of 2000, it leads to significant downdrafts in the broad market in the subsequent years. And those all proved to be very, very significant selling opportunities. We're now at a more extreme level, or just off a more extreme level than we were in March of 2000 at the peak of the internet bubble. Conversely, if you take a look at the 1987, 89, and 92 lows, you'll see that those were incredible buying opportunities where, in fact, low dividend stocks had underperformed high dividend stocks. So in other words, growth stocks, that was a great time to buy them. Now it's a great time to sell them. And so we think that the crowded trade is everybody's piled into growth stocks today, and there's no one left to buy.
Yeah, I know, boy. I tell you, when you look at some of these things, hold on just a second here. I want to get this next one up because the thing that really surprised me the most was the fact that the Dow Jones Transportations, it was so bearish. It just couldn't get going. And Jeff, people don't understand that's railroads and trucking that moves the goods that we're supposed to buy or sell. But those people aren't making money. Something's wrong with these charts. Did I say something wrong? Oh dear. Don't tell me we've lost control.
Looks like you've got the chart up now. Preferred Elliott wave count.
That's what I want. There we go. Fire away, please.
So we've been talking about how this move off the October 2022 low is kind of the final move up in our long-term count, which is a cycle degree. And so we think this is a fifth wave of a fifth wave. And we've got all sorts of subdivisions that we've counted out in it. And we think we're in the very, very final, minor wave 5 of intermediate wave of cycle wave 5, or of primary wave 5 of cycle wave 5. And of course, we don't know exactly how far it will carry. We've got, some clues out there, but we know it can't go further than 55.35. Otherwise, break Elliott's rule.
Okay, we got to pay a few bills here. Jeff Hughes, Alpha Insights. I'll be right back, folks. So stay with us, please.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We're back talking with Jeff Hughes of Alpha Insights. We've got NVIDIA on the line. Jeff, I've got a question for you. On the bottom of that chart shows the volume. Jeff, how can markets break up into new high ground without accompanying volume?
Well, there's a lot of options action. I think there's a lot of leverage on the price in the derivatives markets, and that's really where it's coming from. But, just to review, Larry, we've got a series of things to be concerned about. We've got safe haven assets like gold leading the market year to date. We've got a major Dow theory non-confirmation, triple non-confirmation, which is a very bearish situation. Investor and advisor sentiment is back to its record bullish extremes. We've got a very crowded trade at hand where everybody's piled into growth stocks and they're avoiding value and high dividend stocks. And we've got an Elliott wave count that's near termination, if not already terminated. When we take a look at NVIDIA, which really is the stock, okay? It's the stock that's driving the market. Without NVIDIA's contribution, the S&P would be up about half of its current performance year to date. And if we look at NVIDIA objectively, going back to October of 2022, so basically the last year and a half or so, we can see an impulse wave, and it counts up at 5 waves as complete today. Now, it doesn't mean that the stock can't go a little bit higher. In fact, we think that there's a possibility the stock could even go up to, say, $1,150 maximum. That's kind of our peak that we think that it could exceed. But what we're noticing here is while we've completed the minimum advance to complete 5 waves up, an intermediate degree of trend, which is significant, we're also seeing that momentum is not confirming the new high today. In other words, we've got a negative divergence in momentum. And as you pointed out on the bottom, volume this week is the worst volume that we've seen this year, actually, in the stock. Meanwhile, the stock's up 11%. So what we're seeing here is a market that is being driven by massive speculation in derivatives as opposed to underlying investors who are accumulating stock for the long term. My opinion is we're at the very end of this trend, nowhere near the beginning.
Okay, now we've got Panning for Gold Part 2. This is the gold mining index, right?
Yeah, the last time I was on your show, which was about a month ago, we suggested that investors should take a look at gold mining stocks. And we showed the GDX, which is kind of the senior gold miners. We've been doing some work on the junior gold miners as well, and that looks like it's an even better opportunity. And, of course, these junior gold miners are heavily leveraged stocks, and if we do see continued move to the upside in gold, which we expect Our target for gold by year end is 2,800. Today we're at about 2,300 and change, just off an all-time high earlier this week. We think that these juniors can really break out here above $50 a share, and that would carry them up to about over $100. We think $106 is our target, and we put a stop loss at $39 here. So, about 10% downside, but we're basically looking for better than a double from these levels. So we think it's a very good risk-reward trade to buy GDXJ at current levels.
Okay, that's very good. I still think we've had $100 correction in gold. We've had those before, and they still go up and make new highs. Tell the folks about your newsletter, Jeff.
Yeah, since you mentioned it, we do publish a monthly newsletter. It's called Huge Insights, the big picture. It's available on Substack at hugeinsights.substack.com. We publish on the first Saturday of the month, so the next publications could be on June 1st. And, the newsletter covers a lot of big picture economic issues as well as market issues, and we offer a upgraded version for those who really want to get into what we're talking about. You can upgrade to paid for as little as, say, $12.50 a month, and that'll give you a real good look at what we're recommending in terms of positioning and our detailed market forecast across a variety of markets. And, I hear a lot of feedback from folks, Larry, and they say, Jeff, we love your top-down views of the world. How do we put it into action? And so we created this option to upgrade to paid for those who really want a little bit more. So, it's worth your time to give it a read, I think. Hugeinsights.substack.com is where you can find the newsletter.
Okay, and your website is www.jwhinvestment.com.
jwhinvestment.com.
Okay, and you have Twitter at alpha_insights, correct?
That's right. You can find me on Twitter as well. I guess they call it X now.
I've never used it. Hey, listen, thanks for joining us, buddy. We'll have you on again in a couple of weeks, and I'm glad you got back from your vacation. That New Zealand's a beautiful country, isn't it?
Oh, it is indeed.
Yeah. Okay,
thanks,
thank you,
Larry.
Jeff Hughes.
Great
You bet.
with you as usual. Take care.
Jeff Hughes of Alpha Insights, a really stand-up guy. Okay, let's get on and see what else we've got going on. We've made a sharply lower low here, as you can see here in the S&P, or the Dow Jones. This tells us, folks, that the high that we made back here, let's just go back to the daily, just to show you what's going on here. The high that we made right back here is a major high. You can see how much we've come down right now. Now, we were fortunate to get short right there. That was a 382 of that move just 2 days ago, right in there. And now we're going to see what happens with it, and we'll go on from there. But let me share with you one other one that I'm very bullish on, but I could turn bearish at any moment. This is silver, and I want to get this up here to show you on the daily because I believe in these numbers so much that it's very important to what we're seeing here. Now, here is silver, and it's had one heck of a run. As you can see here, we were supposed to go all the way up to 34.23, but we didn't do that. Where did we go? Move this over. You see this number right over here, folks? Just get this over here a little bit. There it is. You see that 1.618 expansion? Look at that. It was there 3 days, and we pointed that out to you, folks. Remember? It was there for 3 days. It couldn't get above it, and now we've come down. Now, the market today has hit the 382 of the low from May the 2nd. We're sitting on it right now. We get through this, we're coming down hard. The gold has already done it. So the key point now is after this first low, you had a pretty nice rally here. And so let's move this over here. You had a pretty nice rally. Didn't quite make it. Now we're still a penny away. But the rally that we had back, which was significant, we went from 30.40 all the way up. That's a $4,000 rally in silver today, folks. Let's just check and see off the last high. Well, let's take the high. Let's just do the high to see if it made it to there. And you see it missed that 382, but so it's got to be this one is the one that it hit. So we hit the secondary one right on the money, I believe. There it was. No, it missed it. It's this one. That's the one I was going to pick anyway. From this is the last major high. You come up and see we went right to the 382. And what did it do? It started to come down. We're going lower in silver, folks. As soon as we hit this little bell ringing, and you'll see. Let's take a break. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, with 2 hours to go in the trading day, we've now dropped 65 points in handles in the S&P since the high. The NASDAQ has dropped 250 points on the downside, and of course the Dow Jones well over 350. So anyway, it looks like the market has made some type of a turn today, whether it's a big one or not. All we know is that today's one of those big days, a big full moon, and as Norman Winsky said, you got to pay close attention to those. A lot of people have said that along the way, but Norm preaches that, so that's always good. That's a 14-day cycle. That's all it is. It is no more than just that. So let's keep a close eye on this. I hope you can join me tomorrow starting at 9 o'clock New York time. Contact Jacob at TFNN.com and he'll sign you up if you can. You get 2 sessions and you'll be able to see me every second and fourth Fridays of the month until I get too tired to do it. But I enjoy doing it. I love the trading part. I don't do too much teaching. I answer lots of questions. Occasionally, I'll bring something up that's super important, like why the expansions shift and why they go back and forth and why it's not consistent every time. If it was consistent every time, folks, none of this would work because everybody would know it. So that's the main thing that you want to be watching. But if you get a chance, join us tomorrow. That's Jacob at TFNN.com, and he'll sign you up for tomorrow's session, and that'll start you into the session we're going to have for June. We'll have 2 sessions in June, the second Friday and the fourth Friday of the month. Also, try to do something nice for your neighbors, folks, because believe it or not, there's a lot of people out there that are having a lot of trouble, and it's not an easy gig out there. So try to keep that in mind as you're looking at this, watch these things jump up and down each day. Anyway, that's pretty much what we're paying attention here today. So live every day in an attitude of gratitude, and may God bless. And I'll see you on the flip side on Tuesday, because we have a holiday coming up. It's Memorial Day. Always got to remember the veterans, folks. We'll be right back.